What's up, YouTube? How you doing? Another great day to be trading and to be with you to bring you some more trade journey with Russ. Let's see if we can start our topic off at hand. And hopefully you guys already opened your accounts like we talked about last time. And that should be either with TD Ameritrade, Webull, which I'll have a link in my YouTube channel here when I post this, that if you subscribe there, you get 2 free stocks with Webull, and I get a free stock as well. That's just the referral plan that they have in order to help fund everything that we got here and all the equipment. So today we're going to talk about the equipment, the setups, and all the starting points that you're going to need to be successful at trading, depending on what kind of trading you are, looking to do: part-time, full-time, day trading. We'll get into that in a little bit. So hopefully by now you have your account, like I said, with TD Ameritrade, E-Trade, Charles Schwab, and like I said, I recommend Webull, and I will have my link down there so we all can get free stocks. They also give you a free Google stock, and you get a free Google stock. Obviously, that's like $1,600 or something like that should automatically be in. So I wanted to touch on a few things with your account. As for if you deposit your $2,000, fund it with that, you will automatically be qualified for margin account. And that will obviously let you have some credit with your margin account. But with the margin account, what I did want to talk about is the psyche and psychological part of the trading that you have to know and be ready for, if that's what you want to do or not, or you're just going to set yourself up for failure if you're not psychologically ready for it. Because if you're one of those people that you feel you owe money that is not yours because it's borrowed or whatnot, and you're going to freak out when you see a day of red or a week of red, a sell-off or just a dip in the market, and I would say margin is not going to be the one for you, because you're probably going to freak out in one little dip and sell off, and then right after that you sell off and take a loss. It's going to shoot up, and you're going to just always be losing money, and not going to be able to be successful at this if that's not something you can psychologically handle. Which for me, I am perfectly fine with waiting through, and you got to know that there's ups and downs and dips and whatnot, and some of them are unexplainable, and some of them are manipulated, if you want to call it, what I'm sure a lot of you seen with all the stuff going on with the game and shorting and hedge funds, and there's this black boxes that I'll talk about, that high volume trading. But it's one thing you need to think about. If you do have a margin, you're going to get a margin. If that's something you're going to be able to work through and handle during this journey to being a full-time trader. And if if not, either one, you should. If you can't do with it, just make it a cash account and stick with the cash. Either way, though, your psyche is going to be a big part of this. You're going to have to be able to either just not look at your account if you're in a trade, and you're not going to be able to deal with it being in red or looking like you're at a loss or whatnot. And you're just going to have to. The main thing is you got to have a plan that you're going to trade. So we call it plan your trade and trade your plan. And you got to stick with that. Like, you can't. The number one rule I would say is don't listen to your neighbors, your coworkers, or family, anybody that is giving you stock tips, because more than likely 90% of those people do not have any stocks invested, money in the stock market, or do they even have an account for them to have anything to speak on. They're speaking off on something that they heard from John, Joe, and Bill from over here, and they're just, always either the bearer of bad news or they just like to speak on something they don't know. So my number one rule is I don't take any stock tips from anybody unless I deem them a relevant, source. Either they do this for a living, it's just something they do. And at the same time, whenever you do get a stock from someone you trust and their stock tip, you should always do your due diligence, homework, checking it on yourself, make sure it's something that you want to put into your plan of the stock market. Because if it's not, and you're not comfortable with it, just don't even trade it. It's not even worth the time or hassle or anything. So 1 second. So as I was saying, let's, we're gonna make a few ground rules on this for us before we even get started in the whole stock thing. I think what we're gonna do from here on, I'm gonna do a series of videos touching on a little bit of each section that we're going to want to touch, so you can actually have a kind of a guide to getting started. You can always go back and look at that one segment or whatnot that you might want to brush up on, double check. You don't have to worry about listening to a 2-hour video just to find one thing that you're looking for. So I'm going to try to break it up into sections, or videos, so it's going to have a kind of a basis on what it's going to touch on each one that we're going to talk about. And today is going to be starting, like I started out with, funding the account, margin accounts, getting that set up, and our whole setup process with what you need and have to get, and something to think about of what you want to do before you just jump into this full-fledged. So hopefully we've opened the account already. Like I said, we have the Webull where you get 2 free stocks. I suggest, and you can have multiple accounts, don't get me wrong. I have TD Ameritrade and Webull, so I have both of them. You can get 2. TD Ameritrade, I feel, is a very good account, a good source. They are pretty fair and evenly, competitively priced with zero charging for each trade and no commissions and all that. They're right up there with, that's why Robinhood got so big. Do not suggest Robinhood at all. Webull, because they give you 2 free stocks. You could get a Webull stock and your account will be sitting pretty good right off the top. You know what I mean? So let's do that. You got your account. Hopefully you already have that. And if not, you can still go get a Webull. If you already have an account, you can open up another Webull and still get your, enjoy your 2 free stocks. And hopefully you get a Google, and that would be awesome. And you decide if you want to be in a margin account or a cash account. And you need to really sit back and think about your psyche, your psychological. It's a big part of this whole thing is psychological, where you're at with that and how you react to certain things and certain news and all that. You don't want to hear any news you hear. You don't want to react. Pretty much, you can listen to everything you get. I listen to all kinds of stuff and different inputs and different sources and whatnot. Just because I hear one thing, that doesn't mean I'm gonna run for the hills or, oh my gosh, let me sell this off and it's gonna tank on me. Like, you need to, everything is due diligence and do your own research and get as much information as you can from different sources, but make your own decisions at the end of the day. You only know what you want to do, what you feel comfortable doing. And the second thing is going to be to open, hopefully you have already. I'm suggesting Thinkorswim. I don't know of another advance. I'm sure there is. If you guys know of one, feel free to put one in the chat. Let me know something that you have used and you like as for your paper trading. Because Thinkorswim is what I use, and I'm gonna share my screen with you here shortly to show you why I like Thinkorswim and how that's going to help you become a successful, profitable, and hopefully full-time trader and good and comfortable with what you're doing. So I will show you that here shortly before we end this. My Thinkorswim paper trade, of how I get a lot of information and a lot of practice, pretty much. Because like I said, we're doing this journey together. Where I'm not an expert at anything. This is not giving anybody any financial advice. This is purely educational and entertainment purposes. So I want to do this journey with you guys together, and we could hopefully use one another to be successful and, you know, beat the hedgies and get ahead of this rat race. And one of the other things that we need is the equipment. You need 3 to 4 screens, 3 or 4 monitors. I have 3. I really should have a 4th one is what I'm gonna, my goal is to have a 4th one. I have a monitor. I'll show you guys my setup in another video, but I have 3 monitors, so you should at least minimally get 3 monitors. Doesn't mean you have to have it, but it makes it a lot easier when you're looking at stocks and searching through things and just working on 3 monitors minimum. I would say you go buy a monitor stand that goes right to your desk. Mine clips right to my desk, comes up, has arms that swivel out, and then I have my center one that goes up, or it can go horizontally. Very easy to adjust and whatnot. And there's also wanted to talk about what you're going to need as, just for instance, your keyboard. You should always have a wired keyboard, and you know, the mouse is fine, but wired keyboard and a backup, because if you're going to be a day trader, you can't have your batteries going out, excuse me, or something, you know, being crazy, and then you're trying to trade a stock and it accidentally double sends it, and then puts you in a bad predicament that you didn't want to be in, or doesn't send it when you're trying to get out of a trade. And I'll kind of touch on that in a minute, but so I'm just going to go over the basics, and then we'll kind of come back on each one. If you guys have any questions, feel free to leave them and I will answer them, or we can discuss that then if I miss something or whatever. You know, we're here together. So you should have your 3 or 4 monitors, your wired keyboard with a backup and mouse, your camera obviously comes with most computers, both your accounts, and then now you need to figure out what kind of trader you're going to be. Are you going to be a day trader? Are you going to be a swing trader? Are you going to be a long-term trader? Like, what are you in this for? Me personally, I'm trying to get to day trading. I'm not all the way there where I feel comfortable being able to trade fully, like every single day like that. I'm working on it, but I'm trying to gather and get the comfortable and the security and confidence underneath me to be able to trade day in, day out like that, like on a regular basis. That is my goal. And right now I'm more of a swing trader. And when you become a day trader, you're trading very fast, your seconds, minutes, and you don't ever hold a trade longer than a day if you're day trading, because then that's going to make you a swing trader. But with that subject, if you're going to be a day trader, you have to know that you have to have a minimum of 25,000 in your account once they make you a day trader. And I believe it's 5 or 10, I don't remember exactly, but they call them full round circles or house. I'm going brain dead right now, but once they pretty much, if you're doing a trade, if you do that amount of trades in one day, you buy and sell, they will deem you, the platform will deem you a day trader, and then you have to have 25,000 in your account to be able to day trade like that, because of how volatile you can be. So that's another thing you need to think of what you want to be or what you want to do, and what you need to be able to do that. And a swing trader is someone that'll hold one for a few days, days, months, shorter time, and sell it. Long-term traders, obviously, what like blue chips is a lot, and they're trading long-term. Apple's, Google's, Microsoft, stuff like that is more of a long-term trading. And you have bonds and everything, but you can do stuff that if you're looking for your retirement, you could trade in that. Me personally, I'm just going to speak on swing trading, and then hopefully we can get to the day trading once I am there to be able to tell you guys, what I'm doing. So that's 2 things. And depending on what you want to trade, right, how much you're going to have in your account, what you want to start with, what you want to do, you're going to deal with penny stocks, which are very volatile. That's something you need to be in and out of fast, because those things you cannot trade penny stocks in the extended hours in the nighttime, because those are just all over the place. They can go up 100%, 200%, down 200% plus, and the business could be completely gone the next day. Like it could be solved immediately, gone. And that is not something you want to sit and forget about. You need to be on it, watching, have set parameters, and be very on it. It's just like I feel like day trader when you're trading penny stocks, because there's just no certainty that that company will be there tomorrow. There's no assets really. They're a small company trying to come up, and you know those are penny stocks. Anything under $10, the small cap stocks. Then you have your mediums, which is $10 to $100 stocks, and that's mainly what I'm trading. And then you have your high end blue chip stocks, which is $100 and up share stocks. So once you got to figure out what you want to be in that, and a good way to start if you're not sure and just have no idea, what are you into? What kind of stuff do you like? Do you like to play games? Do you like to video record things? Do you like to take pictures? Anything that you're into, your kids are into, whatever is something that's on you're regularly, you know, looking at or on the know about, because it's something you like, is a good industry to get into, because you already are familiar with that industry and it's something you're looking at already, right? Like you're already familiar with that. So that's always a good way to try to, if you're trying to figure out what stocks you're going to get in, think about what you're doing, what your kids are doing, anything that you were already looking at and know the ins and outs of it, right? Because it's something you do, is a good way to start your trading, or to start where you want to get in at. What you do, what you like to do, what your kids like to do. That's a good starting point. And then the other thing is that whenever you're trading, like I said, don't listen in your neighbor. And we got to have a plan and stick to the plan. You know what I mean? Trade your plan, plan your trade and trade your plan. So if you're getting in, for instance, if I get in, like I have MTHE, AMCs, and I have target points. So if I got in at $3 to $4 on Nokia, my exit is 9, right? Maybe 950, 980 is the most, and I'm out. I'm getting out of there. But you always want to get out when it's at the top, you know what I mean, or when you're at your point. It doesn't matter if you when you get into the greed and the guessing, and you second guess your plan, is when you start getting in trouble. Because if you're over there and you think, oh my God, look, it's 9, it's gonna keep going, I should wait till it gets to 12 because I need to make that last money. Like, don't do it. Get in when you target your 9, get your profit, and get out. It's a lot easier to trade a stock when it's moving upward and everybody's buying and no one's selling off. It's really hard to get out of that. Everybody's selling off, and now there's thousands of stocks for sale, and you're trying to get out. It's a lot harder to get out, and it's for, you know, trying to make that extra $2. Most of the time, you'll end up losing your original plan and profit margin. So once you have your plan, you got to stick to it. Don't alter it. Don't alter from it, and don't stray from it. And you always want to have an exit plan. Like I have an exit and a stop loss. If anything goes 25% of a loss, I'll call that a loss and get out. That way, you don't want to sit there. And a lot of the time, what it'll do is when you lose that 25, you then go, okay, it'll make it up right now if I just wait, if I just stay in it and wait. And you're gonna wait. Now all of a sudden it's 30%, 40%, and now you're almost at a 50% loss, right? And now you're scared, betting and gambling almost. You're trying to double up and do not smart bets, and you'll end up losing way more than you would if you just called that a loss and move on to trade another day. Because if you don't, your account is gonna get sucked dry, and you're probably more or less going to be a real short-term trader if you don't just stick to your plan. It's really easy to get caught up with the, oh, I should have, would have, could have, right? But if you have your plan ahead of time and you're already kind of weighed out your goods and your bads and your profits that you want to take, target points and all that, have it already figured, you stick to that. Nothing, you shouldn't hear any other noise. It doesn't matter what everybody's saying or oh, this and that. Like, you need to get out and get your money out. Now, don't get me wrong, if you, hold on, let me back up, because if you get out of your regular trade, right? Let me touch on that. That if you got out, let's say I got Nokia, boom, got out at 9, and then I got out at 9, but that thing is continuing to go up, and now it moved up, to past its second resistance that we'll get into once we start talking strategy. But the your resistance, once it passes that, then you can always buy back in with your money that you already profited. You could buy back in at, let's say it went from 9 and now it's at 1050, and I go, man, I think this thing is going to run to 13 or 14, because there's a resistance, that the line that I see, or maybe it's past, and I'm looking at my next one saying, okay, it's going to still go up to there. Let's see what happens. You can buy back in at 1050, buy in at 1050 with a smaller part weight. When that thing goes up to 1250 or whatever your number is, you can get out and you're still going to make that profit. So you don't have to get that at your initial win. Make sure you take your win and then get back in with another at another entry and exit plan, and you won't lose anything from not staying in and getting your last $2. If hopefully that makes sense. If anybody needs clarification on that, I got no problem speaking on it. But that is always the plan. You stick to your plan, and then if you want to continue it, you can always buy back in or add to your position, if you want to call it. But you already will take your profit, so you're already sitting good. And let's say you buy back in with a quarter of what you just made. Cool, buy in. When that goes, you make more. And if your loss, it comes back down, you get out, you're still up 75%, or you still take that 75% with your profits. So that's a few things that we're going to need to talk. We'll be discussing, and what you need to think about, what kind of trading you want to do, what you need to have, and everything that we need, ahead of time before we start. Oops. Now let me show you my okay. This is my trading, paper trading, my Thinkorswim. Okay, this is everything that you have here. So you see, you can come up and trade. This is an awesome paper platform that you got to have, or at least something comparable to it. So you start off with like 200 grand, and if you see right here, here's your cash sweeps, liquidity, excuse me, and all that good stuff that you have here for the money they let you start with. You come here to trade. You can monitor, analyze, scan, market watch, charts, everything, education. So what it also does right here is their TD Ameritrade network has got a huge amount of news. So watch.
What I was thinking about, and
you can also have up-to-date news on the market right there of what you want to listen to, that you can have in your setup.
And now we've seen Bitcoin new high.
So you have that set up for your market. You can always watch that. You have your platform, you have your watch list right here, and then you have your quick charts, and then you have your strategies down here. So see, I've already filled. I bought a I bought a put option for an option is a whole nother ball game we got to talk about. I bought a put option of AMC, 10 of them, and I sold the put option of AMC, 10 of them. I did that because I wanted to see what is going to work out and how it's going to work out, so I can be very familiar with my options. And once you set that right, they both filled. I can then cancel an order. I can do a duplicate order. I can watch it. I can do I can do a close order, and everything that I want to see here, I can see it play out without me trying to get into options of my own money, where I'm going to get stuck by killing my account because I got into something that I was not familiar with and practicing on. You should not practice with your own money on options or anything that you're not sure of. So, oh, there it is. I'm sorry. Create closing order, analyze closing order. You can roll the order, analyze it. I mean, everything you want to do is right here that you can practice with at your own discretion and no loss to you. That's, I mean, what better way? And it's a live market active site, right? So there's no better way to practice trading and what you should be doing besides this. Okay, this is everything that you're going to need. You can watch, analyze, you can scan the whole market right here. You can do a spread hacker. You can do, I like charts, so you can pull up the charts for AMC, watch it strike or spiked up. So you can go back and see, you know, if you're a technical analyzer and that's an analysis, and you like to do the chart patterns and that's good stuff, or that's what you want to do. You can then see what patterns they have came in the past to see what you like. So these are something that everybody needs to get. The equipment that we just discussed, our paper money trading, and our hold on, I don't know why it's not open like that. But anyways, so our everything we just talked about, please leave some comments in the chat and we can start discussing them and start moving forward. But you know, everybody on this little short video I wanted to get is the equipment that we needed, the accounts that you need, the type of trader you want to be, what you're going to need and look forward to, the psyche behind it, which is everything and anything that you need to be successful in this business. What kind of trade, what kind of stocks you guys want to do, and the paper trade that I just showed you that is so useful. I can't even put it. So hopefully this helps you. And if you have any comments, please feel free to. And I always forget to tell everybody, please subscribe. Thank you for subscribing. You that have supported it, I appreciate it. And leave the comments and hit the like button. And that is huge. I guess that's going to make our community big. And don't forget to sign up with your Webull. Get your 2 free stocks, regardless if you use it or not. And it gets everybody a free something, right? Why not take the free while it's there? All right. Hope everybody has a good trading day. I will see you guys soon with some more informative information. And then, you know, let's trade away and let's stay strong, baby. And also, I'm going to start out with stocks. What I like, what I'm going for in the beginning of the show and the video, and I'll touch on the end of why I like what I'm doing and whatnot there. So right now on mine, I have Nokia, AMC, Macy's is my long-term, like my savings plan. I have Tesla, which is great, right? It's very volatile though, but Tesla. 1 second. Just my brain did on everybody. Sorry about that. So we have AMC, Macy's, Neo, Nokia. I had Pfizer and Tesla. I liked everything in there besides Pfizer, because Pfizer I thought was going to do a lot better than it did. It really didn't move at all for some reason. So that was the one that I don't like. Every other one has done great for me. And we'll talk a little bit more about that when we get into strategy and whatnot, and how I came to get this. And just so everybody knows, my original $25,000 to $5,000 account is now worth $96,000, and that's with my margin though, my total value, and my asset is worth $62,500, something like that for there. So I mean, it's done me very well. And I just want to hopefully get better and share this with everybody so you guys can get, and I want everybody to be successful. And let's take this journey to this financial freedom, get out the rat race, have some time with your family, spend some time doing what you want to do, not what the man makes you do. You know what I mean? Let's get out there and get this money. All right. Talk to you guys soon.